So first off, let's say the vehicle is owned by the owner of the sober home, and the owner of the sober home is transporting a client in their personal vehicle, and they get in a terrible accident around Atlanta. Can you walk me through how that claim plays out?
The real potential is that the claim would get denied because the carrier would look at it as you were operating that in for business purposes. There's a good chance there are exclusions in there for that, and autos are one of the riskier things, especially in the state of Georgia and other states. I mean, most of the minimum limits for liability insurance on your personal vehicle are if you just have those, is so low, you're really putting yourself at risk. There was a sober home operator in the metro area, and I think it was on Interstate 285. They were going around the perimeter, and I can't remember how many folks were on board, but it was 8 to 10 in a van and tragic. Major injuries. That would be potentially a multi-million-dollar claim. So if you were driving that van in your personal name with, let's just say you had the state limits of 25, 50, 25, you're vastly underinsured. And so they could potentially garnish your wages for forever.
Tragic for the sober home operator. And I could imagine that, because the sober home operator is probably going to say, well, the sober home can't afford the vehicle by itself. I can't get a loan. The dealership won't give me a loan, so I'll just buy it in my personal name. And then that happens. It's called a livery exclusion. Basically, insurance companies want to make sure they're not insuring taxi cabs on accident. And so if you start transporting people in your personal vehicle, it's a very gray area. And I always tell people, I don't like gray areas in insurance because it's an excuse for the insurance company to not pay. We've got enough of a bad reputation here in this industry for not paying. Let's not give excuses for them to not pay.